Good evening, everyone. My name is Brian, and welcome to Copycat Trading. Today is Tuesday, January the 9th, 2024, and this is our daily brief video. I'm going to start off again, of course, as usual, with the spiders. And this candle here should be green. It should not be red. That's one of the disadvantages of doing this with TradingView, is that periodically they put a red candle in for a green candle or a green candle in for a red candle. But as you can see, the spiders made an up move today and came past the actual high from yesterday, pierced it, and then came back. So we're actually sitting right in here, $473 and about 84 cents. We were up about 0.15% on the day. So spiders came down, and of course, the last few days I've been calling for a bounce of some kind, and we got a bounce, a really magnificent bounce yesterday, and then we had a little bit of follow through today. Although the spiders were reacting in the pre-market hours to some news coming out from Samsung. Let me see if I can get you some extended trading hours on here. For those of you who don't know, this is actual trading hours in the shade here. This is after market hours, and this is pre-market hours. So this is early morning this morning before the market opened. This is after market hours. So you can see we closed here yesterday. We had this sharp down tick. I think that was an anomaly. And then we just kind of slowly drifted sideways all night. And then this morning, news came out from Samsung that they were going to have to cut chip manufacturing next year by about 30% due to lower phone sales. And whenever they said that, the market dropped quite a bit. So we opened lower in the morning. So this is the extended trading hours. And I go back to regular trading hours, you're going to see a gap here. So this is where it winds up during regular trading hours. This is where it opened up at 9:30 Eastern time, 8:30 Central time. And the market initially dipped like it was going to go down, and it had this pretty big candle, or had a fairly low volume candle, so it just began to drift up the rest of the day. And as you can see, we had a very large volume candle, about 7 million at the end of the day, but overall fairly light volume as usual, and light volume favors the upside. Stock markets very rarely go up roaring with a heavy volume, and they very rarely go down with light volume. So this is light volume day. We had only 65 million shares, including pre and post market, and as you can see, we just didn't do much except for float up there. As far as the Qs go, Qs did about the same story, except for the Qs did eke out a gain, so they actually got up about 0.2% on the day, and they made a slight gain there. And they had the same story as what the spiders did. Actually, it's a little bit heavier because it's going to affect NASDAQ just a little, or NASDAQ and tech stocks just a little bit more. As a matter of fact, Apple actually took, after that small little or after that big jump it took yesterday, it took a small dip, and then it actually retraced down to about 75% of this candle from yesterday, and then recovered quite a bit. Again, this is supposed to be a green candle. Again, I don't know why TradingView can't correct this, but TradingView, even though they're so good at almost everything else, for some reason they'll put a red candle in where a green candle goes, or vice versa. But Apple opened up lower, and then it retraced a little bit and then came back up. So it's still in the running for a good pop over the next few days. If we put in the 200 moving average right here, notice it hit the 200 moving average, which is that brick wall. And whenever it hit that 200 moving average, in spirit of hit, then it launched right off of there. So it still remains to be seen whether this is going to be a permanent bounce for Apple. They have guided lower and have had lower sales the last few quarters, and have had a sell rating given to it by some of the analysts. So it still remains to be seen whether or not we're going to get a continued move by Apple. But if the rest of the market moves up, then Apple probably will as well. Moving on to the Russell, Russell 2000 didn't eke out near as much of a gain, and this is to be something to be noticed, because if it continues down like this, then we're going to be saying that this is going to be making a bearish flag. And for those of you who don't know, a bearish flag is going to go out like this. It's a down move, and then it has a flag that comes off of it that is going to be at a 45 or less than 45 degrees move up. And as it moves up like this, it makes this flag pattern. That is what we call a bear flag. And if it stays within this range or somewhere close to this range, then the bear flag, if it forms out, most of the time this results in a further downside move. That's just a pattern that occurs in the markets sometimes. So not saying that that is going to happen, but if it continues on that way, and if that lackluster performance that it was today didn't recover its losses very well, like the Spider and the NASDAQ did, like the SPY and the NASDAQ did, if it continues to move sideways, we could look for further downside. Now, as far as getting some targets here, if obviously the spider short-term target is this top right up in here before it moves up to the double top that we can see from way back in here in 2021. So if we get to this first top here, that'll be our first short-term target. We'll see what happens from there. Do we roll back over and come down, or do we continue in and we break out from there? As far as the downside, if we continue down, and which I don't expect that we will, but if we continue down, look for this pivot top right here to be our first stopping place, and maybe even a little bit lower. So that range right in there, probably looking like right in here, and probably to right in here, a good stopping spot for the spiders for a bounce, and that'll take the entire market and bounce with it, unless we get some really heavy selling, which I wouldn't expect it to go through it. But it did a pretty good job of going, when it was going up, of going right through this area, but I doubt that it'll do that on the way down. As far as the Qs go, we got the same exact pivot high. You can see that pivot high from over here in July, having the same exact effect on the NASDAQ. If we're going to go down, we're going to probably see that right there. And probably right in here would be the range that we'd see a bounce of some kind. Otherwise, short-term target, the top, right up here at the top. I would like to call that a double top, but we're so close to actually that is the all-time highs on the NASDAQ. The NASDAQ has made an all-time high, so that would be the double top of the all-time highs. And the question remains to be seen, do we break out or do we roll back over? So that's the targets on the NASDAQ and the spiders. As far as gold goes, I've showed you the other day that we have this bigger formation of a head and shoulders pattern. And what I'm going to do is I'm going to switch over to the weekly chart, and I'm actually going to draw that out so that people can actually see what the head and shoulders pattern looks like. And I believe I can click this right here, and we can go from here and draw the left shoulder, and then to there, and we go to the top of the head, and then we go to there, and we go to the top of this head, and to there. Now that candle right there does not count because it was in the pre-market high. Now this is an almost invalid head and shoulders. Actually, if this was drawn correctly, which it's another glitch here, this neckline should be from here across here, and it's for a head and shoulders pattern to be valid, inverse head and shoulders, it has to be flat or slightly downward angled. And if it was the other direction, which I'll show you on the silver in just a minute, it would have to be the exact opposite. So the neckline actually goes like this, and I'll draw it this way. The actual neckline is here. That's the actual no, it's not. The actual neckline is here and here. So yeah, that's actually slightly angled. I didn't even realize that, but that is actually slightly angled. That is actually not a valid head and shoulders pattern, but it is so close, we might just call it an in spirit of inverse head and shoulders pattern. But we'll see what happens with gold. If it plays out, then that is a significantly higher gold price. And I showed that yesterday, so I'm not going to show it again today. There's the silver chart. And the silver chart has this head and shoulders pattern. Let me go back to the daily. On the daily chart, you can see a clear head and shoulders pattern as well on the daily chart. And this is a regular. This is not an inverse. This is actually a regular head and shoulders pattern. So you can see the head and shoulders pattern here. This is the left shoulder. This is the head. And this is the right shoulder. And you can see that actually playing out here. And you can see that today we actually closed below that neckline. Now, the way the head and shoulder pattern works is if you close below the neckline, you officially call it a triggered head and shoulders pattern. So then you would look for that downside of the head and shoulders pattern. Now, here's the caveat to that. If this closes back above this neckline, it is a failed head and shoulders pattern. And the best moves in the market come from failed patterns playing out, for failed moves. So if this fails, we could see a significant bounce in silver. Now, somebody showed this to me today. We actually have an inverse head and shoulders on silver that is much better than what gold is, and that's the neckline. Let me draw it out for you. Here is the inverse head and shoulders on silver that is showing that we could have considerable upside on silver. And there it is. So this pattern on the daily could fail, and we could get a breakout of silver, and we've got a considerable distance to go up as well. So as far as the measurement move or the measured move on this goes, you always measure from the top of the head, and you come down to the neckline. There it is. And then we would take this same distance here, and we would go up at the neckline. And that's our measured move. And so we're talking about, if this plays out, we're talking $34 silver after this Head and Shoulders plays out. But we are technicians, and so, or at least I'm a technician, and so I'm always going to look at what the market is telling me right now versus what it's telling me for something that might happen in the future. And right now we have got a triggered Head and Shoulders pattern to the downside, not an inverse Head and Shoulder. We have a triggered Head and Shoulders pattern to the downside on silver. So we'll see what happens there. All right, moving on to natural gas. In natural gas, we had a great big pop today. Popped up almost 17%, I believe, in one day, or 10% in one day. Went up to the 304 level that I was talking about yesterday. This line on the chart went up to 304, pierced it by quite a bit, and came back down. Now, natural gas is unusually strong right now. You can notice that it's broken through 1, 2, and here's the third resistance level that it has broken through, and it may be heading up to $4. There has been a lot of discussion, a lot of buy-up of the natural gas because of the really cold weather that the United States is having right now. But natural gas has been down here in this lower territory for quite some time, and its normal region of operation is up in here, $8, $9, and we have been way down here at historic lows for quite some time. So we could see a great big pop in natural gas, but probably not until we get some backing and filling. I don't think it will. I think this is probably the place that it's going to pull back. I don't know, but I think it probably will. But if we make it through that level, we've got this area of resistance right here that it's going to come in contact with, as well as this upsloping trend line here that I drew in several months ago. I'm liking this because I was in at silver right down here, or excuse me, down in natural gas right down here, and so I've been writing it up the last few days, and I think I got rid of some right here, and then I got rid of some right here. I only wish I would have kept it until right here, but I didn't realize we were going to make such a big pop. So I'm looking for a pullback, and then I'll actually get back in a little bit bigger position in natural gas as well. U.S. oil. U.S. oil is just holding this trend line. It popped above it, looked like it was going to break out, and then it came in and it just kind of traced that back below, popped above it again, and now it's on this trend line again. And so it's not looking too healthy. Natural gas actually appears like, if you look at a bigger chart, it actually appears like it's trying to make a a bearish flag. And again, a bearish flag is where it moved down and then a kind of a up and to the right slope of the trend line up and to the right. And this is not a good pattern whenever you're looking at price action. This is actually a pattern that could indicate that we're going to get another drop on oil. And like I told you yesterday, if we get a drop on oil and we break these lows right here, there's really nothing stopping us from going down. If we break the $65 level, there's really nothing stopping us from getting into the 50s. And so United States oil may be a little bit of trouble here. We'll just have to watch the pattern and watch the chart and see what happens. But it is underneath its 20, it's underneath its 50, it's got a downtrend going, and it's on this downsloping trend line. All right, Bitcoin. Bitcoin made that big breakout yesterday and hit into some resistance. I haven't really outlined the chart, but it's coming back and it's revisiting this upsloping trend line, which is a normal process during a breakout. It comes back and it revisits the trend line. And so we'll see what happens here. If it breaks back down into this area right here, then it could probably go back in and chop some more. And this first layer of level of support, this upsloping trend line, if it goes up, it's probably not going to go any higher than the 618 retrace. Being about 50,000, somewhere in there is what I'm seeing. So 50 to 55,000 would be the maximum upside right now, and we'll see what happens whenever the ETF gets approved for Bitcoin. As far as the semiconductors today, the SMH was up again, and it eked out a little bit of a gain. It was up 0.27%, so NVIDIA and the rest of them were up quite a bit. So let's go over some of the Magnificent Seven. I'm only going to go over 4 of them. I already talked a little bit about Apple, and then here's some Tesla. Here's some information on Tesla. Tesla, actually, that is a red candle, and it belongs as a red candle. So Tesla's finished at kind of the lows of its day. It went down to this area right here in 231.96 and then popped back up. So it caught a little bit of a bid in the day, but overall, Tesla is down. And then NVIDIA. It's funny how that works. I worked a parallel channel on this today, starting from this low, from that big pop under earnings, coming in and meeting these lows, and then drew a parallel channel all the way to the top of the high here, and it pierced that and came right back in. So we'll see if NVIDIA actually continues up and makes a breakout here, which would be absolutely spectacular. And if it didn't, then it would come back down and probably hit these lows or these highs here and this high right in here for support. So that's what it is on NVIDIA. And then Microsoft, we got about the same exact thing going on. Microsoft on the weekly chart, a lot of people look at the daily chart and they only look and see what happens. But Microsoft, if you look at the weekly chart, it is only making a bull flag. This is a in spirit of bull flag, and that triggers, or that indicates, that we're going to have further upside. And so Nvidia, or excuse me, Microsoft might be getting ready and poised, as you can see, it's at the top here, of making another push up. It's been overbought for quite some time, especially on the monthly, but everything is right now, and there's nothing saying that Nvidia would, or excuse me, Microsoft would not make another push up and make new all-time highs. All right, well, that's it for today, guys. And so I've updated you on everything, including a little bit more than what I typically do, but I figured I might bring these into the normal everyday briefing. Until tomorrow, everybody have a great day, and thanks for watching Copycat Trading. I'll see you later.